Hey guys, welcome back to my channel. So in this video, I want to take you guys through a market maker buy model that I spotted on the 15-minute chart in this week's range in October. So if I had spotted this earlier, I think it would have been a huge opportunity, and I think this is a good video to review price action and how it formed, and then how we could have used it as an opportunity. Okay, so let me take you to the charts. Hello, welcome to my charts. So this is where I spotted the model on the higher time frame, which is the 15-minute. So this is a higher time frame for me because I trade on the 15, 5, and 1 minute. So a market maker buy model on the 15-minute is huge because it allows for so much range, and all of this is just like, if you spotted this early, you can make huge runs. So this is what I noticed in this market maker buy model and how it was formed. So Sunday is when price opened for the week, but the previous week, what did price action do? We consolidated and we slowly went back and forth, back and forth, back and forth, up until this news event candle here. So this news event candle was NFP. So that means that is like a huge volatility day where we don't know where price is going to go. In this case, it just went straight up, but we left these highs, as you can see, on that day, and we closed here. So what does that mean? That means eventually these highs should be taken. We're so close, and we left another high. So this is creating more liquidity to the buy side. On Sunday, we can't predict that this is going to go down unless you have a different model, but in my case, I had an idea since we had to sweep all this, we could have either gone up to go up, take this out, and then sweep it, but on Sunday, we just went straight down. So we left all of these highs, 1, 2, 3, 4, 5. This one, the slowest one, was swept, but 6, and then all of this was just left behind. Typically, when price does not want to run back to the upside, we usually just go down, up, sweep, come back down quickly, so no one has a chance to enter. But in this case, we left perfectly relatively equal highs. And then price didn't drop all the way. I believe it's because of all of this price action here. So this is all balanced price range because we went back, forth, back, forth, back, forth, back, forth. This area is a very high resistance liquidity. That means it's really difficult for price to slice through. Price can only go through areas where there's just one-sided direction. So do you see how there's one side here? It's so easy for price just to go straight back up from here. So that is exactly the type of liquidity we engineered before we dropped into this area here. So this is the best area to spot the market maker buy model for myself as a learner and a student of ICT, because at this point I don't know if liquidity is going to go up, down, and sweep it previously, but at this point, I know that all of this is left, all of this is left, and we do expect to go up to the daily range of the fair value gap low. So that was my narrative on why this should work. We could have dropped lower, but as you can see on this wick here, this was at 6:15 p.m. in a new day. We attempted to go straight down and we rejected straight back up, and the entire time we've been closing in the upper quadrant of this daily wick. So this is a daily wick that I've marked over here, and we're just sitting in the upper quadrant. So because we're in the upper quadrant, we did have one more attempt. So we made lower, 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 lower. So the entire time we're just going lower. When that happens, you know that everyone is putting their stop losses here and anticipating a run down to this liquidity. However, because of this back and forth price range, this is very hard for price just to sweep straight through. And then as you can see, London tried to attempt lower, but we rejected quickly with this huge wick. This would have been the perfect entry, as London has the perfect time when price can switch directions. So typically London AM and even like 4 AM, that is like a really good time for price just to run back the other way for liquidity. And since this was all just easy liquidity, like unswept 1, 2, 3, 4, 5, retail would have thought that it's just going to keep going lower. We're very bearish from this, and they would have put all of their stop losses just above these, probably even here. And then as you can see in London, ran it up here. We spent a lot of time. So this is an inefficiency on the 15 minute. You can see we touched it 1, 2, then we just stopped touching it. After we tried to go for the low, we went there quickly. That's kind of like your first sign that we broke an intermediate term high. So this is an intermediate term high. So we broke that from this. So now we have a change in the structure. So it's high, lower high, lower high, lower high. Sorry, that's not an intermediate term high. That's just the short-term high. But breaking this is a change in structure anyway. And then breaking it again, that's kind of more confluence. So in London, you could have caught this trade from here to the retraced here and all the way back here. New York AM, at this point, we were holding very strongly above this BISI. So whenever you see the highest BISI form, you want price action just to touch it and go reject away. So one touch, reject. Down, down, sweep, touch it again, reject. See how it just touches it once and rejects straight away? That's exactly what you want to see on a BISI. And 1, 2, 3, there's 3 gaps here, but only the upper one on the 15 is what you want price not to break. If it breaks that, then we could have more consolidation and go back down. This is very bullish. Order flow is bullish. And then you can see as soon as 930 hit, bang, we went straight up, take out all of these highs. And then yeah, now we're just PM, and then we retraced a bit in the PM session, and then we closed all of this above all of this. So yeah, so that is the market maker model that I spotted, and this is how I'm going to learn to spot them earlier next time. See if there's similar circumstances, and you could even find these on the 5 minute or the 1 minute when price action, when price action is going to go back up, but it's just like it's like a retracement, but then there is a first consolidation, accumulation, and then just redistribution back up. So that is how I see market maker buy models, and I hope you learned from this video. Thank you.